Today I'm going to summarize all of Graham's videos in under 10 minutes, and if I am successful, smash the like button and share this video to help with the Google algorithm. So let's start off. Graham Stephan believes in long-term investing. This means that he doesn't believe in trading stocks or cryptocurrencies or real estate. Once he buys it, he intends to hold it for 10 to 20, maybe 30 years. Maybe he never intends to sell it. Now, he believes that he should hold these items for a long term because he doesn't believe that timing the market works. He always shows statistics showing, oh, it doesn't work, and people usually don't make as much money as the people who hold for the long term. Now, I actually think Graham is quite wrong, because some of these things you can actually do quite well in timing. For instance, cryptocurrencies. I think the downtrend in cryptocurrencies was quite clear because cryptocurrencies go down a lot when the Federal Reserve starts raising rates. Risky assets do very, very poorly. So it actually makes sense to actually sell your risky assets at a time like this, when it's very clear that we had really extremely high debt, but 0% rates for such a long time, and now that the rates are going up, it's causing the bubble to burst. Now, Graham says, well, you can't time the market, even though it's obviously that the market is going down. And to me, I think the catalyst for the market going up again will be when the Federal Reserve lowers rates once again. But anyway, if you follow Graham, he doesn't believe you can time the market. He believes in dollar cost averaging, which means that you would pretty much continue to invest in good times and bad times, and invest a similar dollar amount each and every day or every month, however you plan on it, and to just keep on investing no matter what. And he doesn't intend to panic sell when it goes down. He doesn't intend to buy more when it goes up or anything like that. He just will put the same amount of money in day after day, month after month, year after year. Now, there is a big problem with dollar cost averaging. It's that most people will not have the fortitude to stick with a plan where you are continuing to invest and put more money in even while you're losing money, where your investment continues to go down. Graham even admits that the stock market you won't lose money over a 20-year period of time if you do dollar cost averaging. That's his philosophy on it. But here's the problem with that. It's that most people are not going to actually be willing to stick with a investment plan where they're actually losing money for 20 years. And during the Great Depression, there were definitely bad periods of time where this strategy just wouldn't be working out so well. So I think that he has this perspective that people are willing to stick it out, even though I believe most people just don't have the psychological fortitude to continue a strategy where you continue to invest even when things are doing very, very badly. When it comes down to what kind of equities to invest in, Graham Stephan recommends low-cost structured index funds like Vanguard because they charge a very low annual fee. He doesn't believe in picking any particular stocks, although he might choose to buy some stocks, but for the most part, he's invested in the whole market, either the whole market or just the S&P, something like that. And that's because then he won't have to worry about and think about earnings reports or random news that will cause a stock to crash. And he likes this strategy because it is a lot more diversified, which lowers volatility and risk. When it comes down to real estate, Graham Stephan believes in getting 30-year mortgages with the lowest interest rate possible, and basically just holding it, not selling your real estate even when it appreciates. Although he thinks it's great if you can buy it at a very low price like he did in 2009, but he generally talks about getting a good deal, like reasonable. And if you have, by having a fixed low rate, as time goes on, inflation is probably higher than the interest rate. And so your principal is actually going down as inflation happens. Now, the only issue with this is that it could be risky, because anytime you have debt over a long period of time, what if you lose your job? At least if you have a 30-year mortgage, the thinking is that it's less risky than a 15-year one, because if you are to lose your job, a 15-year mortgage actually requires you to have a higher monthly payment, whereas a 30-year, the monthly payment is lower, but your interest is, you're going to pay more interest over the long run. Also, your interest rate is going to be higher for the 30-year, but it's safer to some extent because the monthly rate is lower. So even if you have financial problems, you're probably going to be able to pay it off. Graham Stephan does not believe in going to Starbucks to buy your coffee, and the major reason for this is mainly because his thinking is you can buy 20-cent half coffee at home for about 20 cents per cup. Now, the mistake he makes on this is thinking that you go to Starbucks only for the coffee. There are other reasons why people go to Starbucks. It could be for networking. It could be just for mental health, just to be out of the house. It could also be because you are more productive there. It's kind of like a more affordable co-working space. So there are all kinds of reasons why someone would go to Starbucks, and it's not always necessarily because they're just trying to get coffee. It could be for other reasons too. So it is almost a little bit short-term thinking to be cheap about about avoiding coffee, but that I'm just summarizing his views, and he says don't go to Starbucks. Graham Stephan believes that you should use credit cards that offer you sign-up bonuses, ones that give you $500 or $700, something like that for signing up. Maybe if you spend $3,000 or $5,000 the first 3 months, but of course it's only if you're going to spend that money anyway, because this is free money. And he also recommends the travel kind of cards where maybe there's an annual fee, but maybe they give you extra benefits and then you're getting those for free. Now, this is contrary to Dave Ramsey's philosophy, because Dave Ramsey believes that you're not able to outsmart multi-billion-dollar companies. I actually am a little bit more in the middle on this issue. I think that you can outsmart these companies if you are completely rational, but at the same time, I am aware that a lot of people will fail at this and will end up owing interest and other fees with these cards. So I don't think these cards are always a good deal unless you're strictly rational in the Graham Stephan style. Graham Stephan is a huge fan of what he calls house hacking, and this is where you buy a duplex and then you rent out whatever remaining units that come with the property, and over time the rent should actually help to really cover the mortgage payments on it. In fact, the rent may actually be more than the total mortgage, and in that case you literally are almost staying there for free. So he thinks that it's a very smart pathway. A lot of people do it, and it actually does make sense. I think that a lot of people probably should do it. It probably will take off as time goes on. In one famous video, Graham Stephan was talking about the high cost of the taxes. When he used to live in California, he used to complain about the high taxes that exist in California, and I was always wondering, is he going to leave? And then just who would guess that he actually did leave due to the high tax structure that exists in California. But in another video, he said he's okay with the federal government raising taxes because he's more than willing to pay more, and that kind of shows that he says one thing but kind of does another. And I just think that his accents kind of do show that people will go to a jurisdiction that is actually more friendly towards businesses and investing and things like that. You can have a high tax state, but people who will be paying it will end up leaving over the long run. In terms of income, Graham Stephan is a big fan of jobs where you get rewarded or paid based upon your performance. There are too many jobs where you aren't really paid by performance. You just have to beg pretty much for a raise, and oftentimes your boss may see your job as an expense. I'll give you an example. If you work for a large entertainment company, maybe like say Netflix, and you're working in the accounting department, where in that department you're just a cost. You're not bringing any money to Netflix. If you're working in accounting, you're an expense. And so Netflix has every incentive to keep the costs as low as possible. Now think of, as an example, as a real estate agent. If you're an agent, the more you sell, the more you make. So you're a revenue generator. And so in that kind of system, you actually are paid based upon your performance, and your agency really will definitely appreciate it when you're generating more sales because you're just making more money. Of course, that is kind of fixed too, because it's based upon a fixed percentage commission. You can't just say, hey, I want to raise, I want to make more money. They would say, well, then make more sales, because the rate is fixed. Not as though you can go up to 10% commissions or something like that to make more money. You just really have to sell more. So, but the general topic is that Graham is a big fan of getting paid on performance. In other words, if you're able to bring more revenue to your firm, that should be the basis for giving you more money. He doesn't say work harder, he says to work smarter. A lot of people don't seem to realize that. They say, oh, I'll just work more hours. Well, there are only so many hours of the day. You have to actually think of ways to be the most productive way possible. I've actually applied Graham's philosophy to my own life. I believe in licensing my photos, for instance, as one way to generate money, but these videos also are a way of actually generating money, because it's based upon my performance. If I'm able to get people interested in the topics that I'm talking about too. So I'm applying his philosophy. And finally, Graham Stephan did start a coffee company of his own. It's called 20-cent coffee, something like that, or no, bankroll coffee. And basically, he has spent a lot of time and energy on starting it, getting the logo and fulfilling the orders, finding out the way things should look, and trying to choose which coffee goes in the bags. But even he admits, for the time and energy that he has spent on this, it has not been a very profitable venture. I mean, it's profitable to some extent, but it actually is not like it's a runaway success, and it's not in any way a major competitor to Starbucks. But it is interesting that he has gone into something that's completely different and has done okay at it. I mean, I think he made a profit of 11,000 since he started. I mean, that's great, but it's nothing like what you would expect considering the amount of time and energy on it. Anyway, I hope this video has been exciting and you learned something from it. I have summarized all of his videos pretty much in less than 10 minutes, so I think that's a success. Smash the like button and subscribe, and I'll see you in the next video.